Welcome to Trade the Trend. My name is James Boyd. We've got Scott Thompson with us in the chat. Say hello to Scott. I want to also say welcome to all of you. We got with us Ricebird, Dom, Sam, Trader Joe, GH or Grace, Gary Taylor, welcome. Ecoscaper, Richard, and many others. Sharon, hello. Now, if you're a returning user, we welcome you again. If this is your first time, welcome. Now, our focus is where we talk about trade the trend. We're looking for price appreciation or depreciation. We're looking for trades that could be stock and or option based. Our examples here today will be done in a paper money account so we can practice together. And also remember, if you have questions, just go ahead and ask. You'll see ST initials in the chat for Scott Thompson. He's a fellow instructor, so feel free to ask questions. I'll also be watching that chat as we get started here. Now, remember when we actually get going, the examples that we talk about will be done for general informational purposes only. Also, you might have questions as we do strategies like on stocks and or options. Understand that options carry a high level of risk, are not suitable for all investors. Also understand when we talk about examples, we will do those right in the paper money account for educational purposes. Investing has risk, including loss of principal. When we talk about short options, also known as cash secured puts, understand that those could be assigned. Think of what that short option means. You sold the put, you sold the call. What is that, right? It's the assignment, it's the obligation to do what? Sell the shares or buy the shares. And that could actually happen prior to expiration because the options we talk about are what's called American style options, not European. Now, also remember when we talk about examples, we're not going to, well, we might bring up, let's say, some futures tickers. We're not trading futures. We're just looking at the price of like oil or gold, etc. Okay. Now, also the question we ask ourselves every Thursday is, you know what the question is, what trends are you riding? And boy, there has been quite a few trends lately in the marketplace. Our focus here today is really talking about shorter term and intermediate trends. How do we actually find those for setups? Now, first off, let's actually go ahead and take a look at this chart. Now, I'm going to share with you this chart in just a moment. I added, so when someone comes to our classes, we use some charts that we look at, okay? We call it the package of charts, okay? 2026, okay? And I'll share this with you in just a moment. I added two of them based upon your questions that you asked me. I'll tell you what that is right now. So first off, on this chart, we have two different moving averages. We have a whole moving average. Think of it as a weighted moving average, even faster than an exponential moving average. We have that moving average that I'm pointing to right there is a 30-period moving average. That's the question. Some of you said, James, your setting is a 1020. Can we slow that down to a 1030? That's what this is. Where could we see that? Well, right up top where I'm kind of pointing to right there, you're going to see that it says whole moving average 30, whole moving average 10. That's where you can double check that. Okay, I'll send this out in just a sec, but let me explain it. Now, when we look at the S&P 500, now this is just, in one chart, we're just getting a sense of what the general market is doing. Not everything, general market. Now remember, when these lines are red, we have negative momentum, negative trend in the shorter term. So far over the last couple of days, since Friday, we have not been able to get above the shorter term moving average. Is that a surprise? Probably not. Now remember, we always kind of say that if the price is below the shorter term moving average, the 10, what's the prediction? Pain. Okay, that's the prediction. Why does it go down? Well, because price below the 10-period moving average is usually not an entry signal. It's a sell signal, potentially for some investors. Okay, and they're just walking it down and just selling it off. And you don't really see buyers stepping in. The key word is yet. Now, the question we got to ask ourselves, the pro about using the whole moving averages is, number one is they are faster. The con is they're faster. I just want to do this for just a quick second. Many investors say, James, I like to use maybe like a 30-period simple moving average. Let me just put that on so we can kind of get an idea where might some of those investors try to get in. And if you don't mind, I'm going to kind of use maybe a blue line to depict the standard 30-period moving average. Why do I bring this up? Well, the reason why I kind of bring this up is sometimes when prices fall and we're using moving averages that are faster, we're looking for, let's say, moving averages that are slower on purpose, okay, to kind of see where that trend line might be. We have seen that the 30-period moving average, simple, we actually fell down below that. If we double check this and said, okay, what about the 50? Where are we here? Where is that support level? Where are those investors likely to buy? Well, here's the blue line now depicting the 50, okay? Now, the one thing that's a little unusual here is we have not seen the VIX really spike, like crash higher. It's up, but we haven't really seen capitulation. Some investors might want to kind of see that. It's a little, normally when you get a bottom in the market, the VIX, it spikes, okay? I think there's not a whole lot of panic in the market. It's just kind of more pullback, okay, so far. Now, if we take a look at that chart, we're now sitting right on the 50-period moving average. Let's hold that line there. When we actually go back to the Dow Jones, where are we at on the Dow Jones? We're close. The horizontal line that we wanted to actually have hold, not yet. Best thing we could actually say about today, maybe like an inverted hammer. If you think you're bouncing off a support level, trying to. Today's high went right to the moving average and then sold off. Guys and gals, the hardest thing to really learn is respect that 10-day moving average. If you disrespect that 10-day moving average, a lot of investors, it can get ugly, okay? If the price is below the 10-period moving average, where do you think it's going to go? Lower, okay? Why is that? You get negative momentum. The biggest actually thing is it doesn't matter what the color of the candle is per se until the price can get above that 10-period moving average. And is it trading above or closing? Many technicians would prefer closing. So don't fall in love with the color of the candle. Look at where the price is in relationship to the moving average. And if that line is red, you still got more sellers than buyers. Now, if you look at this, NASDAQ is falling down to the upward trending 50-period moving average, getting a little closer. Now, here's the thing. When we see the price declining like this, I used to be like a turtle that put its head in the shell and then said, hey, when it's over, let me know. Problem is, nobody let me know until 2 weeks after the market would bottom and go back up, and then it was like 2/3 of the way up off the bottom again. And I was like, wait, is that a good strategy? Put your head in the tortoise shell and then just hope it's over? Nah, this is where the investor says, look, I want to see the prices actually go down, okay? Now, I think the biggest thing you actually need to be aware of is red candles, okay? Red moving average lines. That is the price suppressing down to the upward trending moving averages. If you're trying to buy on a more of an intermediate dip, here it is, okay? Now, talking about it is one thing. Doing something about it is something totally different, okay? Now, we're going to do some examples in just a moment. Russell, you're going to kind of see there hasn't been a whole lot of action. I mean, if we said, hey, hard selling pressure, we'd say where, okay? Kind of more looks like a consolidation right now on the Russell, okay? Now, if we take a look at this, let's kind of talk about some stocks. Now, now I go back to Sam's comment, which is not looking very favorable on the NASDAQ. So, and Sam, we would agree, right? So the biggest thing is when you look at this move from low to high, and it's like what I said the other day, you can't, and I'm not saying Sam is, I don't think any investor feels bad for anyone. The movement on the NASDAQ in 45 trading days was 34.72 stinking percent. That is a lot, okay? We're talking about in 45 days. Well, how many days are in the month? Trading-wise, 21. So in a 2-month period of time, the index went up 34%. Incredible, okay? Now, this is like a roller coaster, right? You go up, 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 up. That roller coaster, that hill doesn't last forever, okay? You eventually get it to yank or kind of pull back. So far, yeah, it's gone down. But the biggest thing is, it still is actually up off that low area there, and I'm just going to even take it down here. It's still up 23% on the index, okay? On the index. Now, just real quick, the comment also says, could you take a look at KO? Yeah, let's pull it up just a second. I'm glad you actually brought this up because there's 2 of these names I want to bring up. let's kind of start here for just a second, okay? Now, remember what we said on Monday. When the volatility in the market goes up and the market falls down, or vice versa, the biggest actually thing is there can be a rotation in what people are buying. We've talked about that quite a bit. One of the examples that we're going to bring out, we're going to actually kind of take a look at Coca-Cola, just real quick. We'll also take a look at, let's say, Dr. Pepper. Now, how many of you are, if I ask you your favorite beverage, okay, let's say soda-wise, okay, what would you say? Okay, some of you are red people, blue people, some of you like Dr. Pepper. The reason why I bring up Dr. Pepper KDP, you're going to see it's right there. This kind of has like the reversal. We'll just use the example of Coca-Cola, okay? Now, if we pull this up just real quick, let's kind of walk through an example. So we're talking about shorter term to intermediate like bounce setups, right? Well, we've kind of had this kind of consolidation, and then it was a continuation of the upward trend. Prior high, multi-month consolidation, and then a push to the upside. Dr. Pepper's the same, but it was just kind of like fell down, based, and then starting to reverse. Now, in our example, let's kind of go back to let's go back to I want to show you something, okay? Now, the other day, we showed the example of doing a long call. Now, some of us actually might wonder, what on earth is a long call, okay? Well, a long call is where you say, look, I want to have a right to buy the shares at the strike price. Now, that right doesn't go forever, okay? So I think it was on what? Monday, Tuesday? Well, it was actually on Tuesday. We bought the big Johnson, okay, J&J. We bought the call for $5.75, okay? So $5.75. And if you buy a call, you think the stock's going to go up. Now, some people might say, well, James, when I think about buying a call, I think about putting a house maybe under contract. Well, why would you put a house under contract? Well, because you want the house. Now, when the house is under contract, you agree to a price. That contract goes for a certain length of time. While it's under contract, what do you want the house to do? Oh, of course you want it to go up, okay? Well, the same thing here with this long call. This contract doesn't last forever. It goes to the 17 June expiration, and we have a right contractually to buy 100 shares of stock at 240. All right, now, then we bought that call for $5.75. But what you're going to notice is here where it's at 802. Now, the thing that I was confused on when I got started with options is, well, could you sell it, or do you got to wait to the expiration? No, you could try to sell it. You'd have to look and see, could it fill, et cetera, check liquidity. The reason why I bring this up is I want to show an example of a long call on Coca-Cola, okay? Now, I'm going to bring this back up. So that's just kind of a piggyback of what we talked about the other day. I'm going to bring back up Coca-Cola, okay? Now, if someone said, James, I think Coca-Cola could go up in price, that's the idea, of course, is the bullish trade. Now, if we chose something, let's think through strategy for just a second, okay? If you buy a long call, you have a right to buy those shares. You want there to be some time for that trend to happen. Now, we're not going to do 7 days to expiration. This doesn't give a whole lot of time for the stock to go up or down or trend in general. What we're going to do now is we're going to go to, let's say, buy the July 17 with 36 days. The minimum that we would look at is 20 to 50 days expiration. 20 days expiration. In our case, for the most part, 50 days maximum, okay? If we went longer than 50, which we don't typically talk about, we might even kind of talk about long-term leaps, et cetera, but we're not going to go there. Now, I'm going to choose the at the money strike, or I should say in the money. Now, if we go in the money, which just means the strike price is lower than the stock price. Now, if that's the case, there's some intrinsic value, also known as equity. And some of that value that I'm pointing at is intrinsic value. Now, the intrinsic value doesn't stay. The intrinsic value will be based upon what the stock price does. What we do know is that time evaporates And as the time evaporates, the option premium could go down, assuming that the volatility stays the same. Now, what I'm going to do is I'm going to click on the 259. Now, when I click on the 259, what does it do? Well, it brings up a buy order. When we bring up a buy order, we're now going to go to actually just kind of push it to the mid price. The mid price is just kind of the in-between value, okay? In-between value. Now, Trader Joe says Coca-Cola sitting at the 5% envelope line. Noted, okay? Now, remember, we said that's where the cap was that we were going to do our example. If you're saying, I don't know, what are you talking about? I'll show you in just a second, okay? Now, I'm going to put it at, now, price moved on us. We're going to go 252, okay? Now, if we just buy this call, given this strategy, what would be the most the investor could lose with a long call? Well, the most they could lose with a long call, $252, whatever they paid for the long call. Unlimited upside or infinite, and you're going to see that we actually have in that case a commission, one contract, 65 cents. Let's put this in the paper money account so we could follow through just like we did on the other one. And I'm going to come back to this, bring it to the trade tab, just like we did before. Click, and there. Price moved on us again. Moved 8 cents on us just when we were talking. Okay. Now, what I'm going to do is, okay, I'm going to put it right there and move. I'll put it right there and see if it can get a fill. Confirm and send. This is what we showed. Now, this is a paper money trade, okay? Now, here's the thing. As you're learning, you should practice trade a lot. How much is a lot? Hundreds of times. Thousands, okay? You got to get practice. You're not going to get good at anything, okay? Just doing 1 or 2 trades a week. It's too slow, okay? Speed it up. Now, what I'm going to do is going to go send that order. Now, remember, if we said buy it at 252, we got to see if we can get a fill. So just because I put my order in doesn't mean it's going to fill. I got to get a fill. Now, if it doesn't fill in the first 2-3 minutes, what I'm going to do is I'll go in and just maybe slightly tweak that order. Okay, so that's number one, Coca-Cola. Now, let's go back to the chart because someone was mentioning about Trader Joe. It's at the 5% envelope line. Now, if you don't mind, I'm going to keep this line on here, okay, on this chart. I kind of, remember this line right there? And I'm going to do this, and I'm going to share this with you. And what I'm going to do is, let me duplicate that. And I'll send this out. Let me just put on a 30-day moving average, okay? Because when you get pullbacks, it's actually nice to kind of see where some of these lines are. I'll put yellow for that one, 4. Let me just double check. And then I'll save it and I'll send this out to you. Okay, now, okay, here we go. Now, what is this? Well, the yellow line in this case, let me delete anything that we have above. Okay, delete it. The yellow is a 30, okay? The blue is actually a 50, okay? Let me actually go back and just save this, and I'll send this to you right now. Now, there is also one other chart that you're going to see right there that we have not yet talked about, but someone had a question. So let me share it. Share grid, okay? And then I'll show you how to put it on. And we're going to look at the next example. I want to go look at Target for just a second, okay? Now, what I'm going to do is I sent that link out to you. Now, if you're watching this on recording, I'm going to put it in the description. Where's the description? As you're watching this video, go right below the title of it and click on Learn More or See Full Summary, and you'll see the script there as it gives a brief description of what's in this video. Now, how do you put that on? We're going to go to Setup at the very top right, Setup, Open Shared Item. It's not too bad. And then just copy and paste what I sent in the chat. There it is, okay? Now, what you're now going to notice is if we now go Preview, okay, Preview, you're now going to see that there's the boxes, okay? Once we actually do that, it's going to bring up these boxes on like a little mini chart. So I can show you how to save these. I'm just going to bring it up. It'll show like this on yours. Just a small one, okay? How do you save that? Well, let's go up to the boxes right there. Does everyone see those boxes? We're going to go Save Grid As, Okay, so it's not too bad. Click on the boxes, click Save Grid As. And if you don't mind, I'm just going to call it the package, and I'm going to label today's date, 6/11. Okay? Now, when you pull this up, where does it go? Well, you're going to see that it's going to be right in, when you click on those boxes, there it is. How do you bring up the individual boxes? Well, if we want to look at this chart, I'm going to click on those 3 lines right there, say maximize sell. That's not too bad. Click on the 3 lines of any of the charts, maximize sell right there. Now, if we went back and actually took a look at this, you're now going to see that we can just kind of zoom in, zoom out, and also go back and forward on the charts. Okay, we'll talk about those. Now, the comment was really on regarding kind of we're at the 5% envelope. Well, if we went back to that for just a second, what I'm now going to look at is, are we at the 5% envelope? I kind of see we're probably about maybe 4%, not quite 5. The blue line on this chart is a 10-day exponential moving average, so we talked about before. The yellow is 3% above, red 5% above. So Trader Joe, I mean, you said 5, we're about 4, okay? Matter of fact, if we go down just a little bit more, we're kind of almost at 3, okay? Now, yeah, so the comment was, where do you import that? Okay, so let me shut that down. Very top right, go to Setup, go to Open Shared Item. The very top right, Open Shared Item. Okay, now, let's go to just real quick, Target, okay? Now, I also want to kind of make mention of a stock, Ross Stores, okay? Now, if we take a look at Ross Stores, now, by the way, notice when I type in Ross, in any of these boxes, there, they all change. Now, again, I think of this like my toolbox. Now, I'm not going to tell you what tools I have. I'll just give you a hint. They're red, okay? And some of you can guess maybe on what type of brand. Now, if you take a look at this, I'm going to go to Maximize Grid Sell. Now, if I were to show you this chart, what type of trend do you notice? Now, I'm not going to talk about Ross Stores right here. Okay, well, maybe I will. But it's not going to be my first one. But retail has gotten a little push. Now, do you have children? Do you have grandchildren? Do you notice sometimes that they just like to buy clothes and more clothes and say, I don't have any clothes and I don't have shoes, I need more shoes? Hopefully my daughter hears me and she's laughing, okay? Now, little fun here, okay? Now, if we take a look at this, some of the retail industry group, by the way, what ticker is that? And then the stocks underneath the umbrella of the retail space had a pretty decent push. We'll come back to Ross in just a second. But I want to go back and look at Target, okay? Now, if you look at Target just real quick, and let me kind of show you this. So remember, what is the yellow line? Well, that's a 30-period moving average. The blue line, what is that? That is the 50-period moving average. Why did you put those on? Well, sometimes now our moving averages we normally look at, they're faster. The problem is when prices fall down, we want to have an idea of where those slower moving averages are. 50, the 30 and the 50. Now, what you're now going to notice is if we were to draw like a diagonal support on this, and I'm just going to circle some of these recent lows. So you don't have to know anything really about technical analysis if you can just circle lows. And then once we circle lows, like in first and second grade, we're just going to see if we can play the game of connect the dots, right? Connect the dots as in drawing a line touching the lows to see where what we call the support is. Now that support, think of this as I call it the trust line. This is where those bulls are saying, yeah, I'll trust the stock if it can stay up above that level. Now, if it does not stay above that level, now all of a sudden they don't trust it. They don't trust it, they probably don't want to hold it. They don't want to hold it, they might sell it. Does that make sense? Now, if you take a look at this chart, we could also say, well, James, you drew from the lows. Let's draw from the highs. Let's do it. So what I'm now going to do is I'm going to say, where were these recent highs? There's a high. There's a little recent, another little high right there. There's another little high right there. And what you're now going to notice is there's another little one right there. There's kind of been some highs, and sometimes, just like support, just like resistance, we could actually see horizontal and diagonal lines. These lines are very important because this is where traders are probably taking their signals off. If we were to draw a line like this, could be at a line of resistance. If we draw a line maybe touching 3 of these, like probably about right there, some traders, they might already be in, okay? Not everyone is going to trade off the same line. Now let me go back on this for just a second. Let me right click on this chart, clear drawing set. We're talking about trading shorter term and intermediate. Well, remember when we talk about the timing, we just count to 3, okay? So when we talk about counting to 3 is number 1 is when the shorter term moving average goes green. Do you see it? Uno. Okay. Now, number 2, you're going to see right there. That 30 period moving average goes green. 3, you're going to see in this case, the moving averages cross over. Okay. Now think of this as, I'm going to label this number 1 is, we're going to kind of call that early. Okay. That's an early entry. You're really saying, I don't have a whole lot of confirmation. I'm just going to get in on the first sign of a setup. If you said more mid, okay, little bit more confirmation, mid confirmation. And if you said 3, we're just going to call it more confirmation. C-O-N-F, that's not conference, confirmation, okay? Now, the question I always ask you is, which entry signal do you take? Now, some of you might say, well, James, I'd take all of them. I dollar cost average. Okay. And that's what you might do. You might say, James, I buy some, okay, at each one of those if I can get the turns. Now, the biggest actually thing is here, now I just want to kind of see just real quick, okay? Which one do you buy? Do you buy in 1? Do you buy in 2? Do you buy in 3? Which one? Now, here's the thing. Do you ever notice that the signals are there, but you got to trade the signals? You ever realize that? Like, the signals could be there, but the signal is just the signal unless the investor or trader trades the signal, okay? Now, Ludus Lab says 3, Pia says 2 and 3. I knew Pia wants confirmation. That's just, she likes confirmation. Now, Surreal 3. Okay, now if you kind of said, James, in the paper money account, which one does the paper money account like? The answer is 2, okay? It tries to get the middle of that. Now, remember what we said before. The confirmation is not free, okay? To get 3, you got to wait more for the stock to actually go up, and that means the stock has moved more. You buy in 1, 2, or 3 doesn't guarantee it's going to go up. It's just saying that it's a setup at that point in time. Now, let's say the investor says, James, I don't trade options. I trade stocks. Well, what we're going to, now let's go back and double check. Let's go back to our toolbox. If I went back to this chart right here, and notice on the right-hand side, see all those little charts right there? That's the charts we actually have. If I go back to that little hook arrow, that hook arrow is going to take me back to all of them, okay? Now, if I wanted to, I could just cheat and go right back to the one I was looking at. Click on the 3 lines, say maximize sell. There it is. Why do I look at this? Well, because I want to kind of see how high are we. Well, what is the yellow line? Type in the chat, what is the yellow line? The yellow line is, we're just saying we're 3% above the 10-day moving average. 10-day moving average, that light blue line. Many investors would say we're probably not too high, okay? We classify really buying between, let's say, the 10-period moving average and the yellow as like, that is what some investors might call an A entry, okay? Because in other words, to get a signal, we need the stock to go up somewhat off the moving average to get a signal. Now, you buy an A entry, it doesn't guarantee it's going to go up. It just means you're closer to support with a signal to potentially enter. B is between yellow and red. C is actually between red and white. And in this case, we're going to say D is between white and blue. And if someone says, man, I'm going to buy really above that blue line, some investors might say, my gosh, that might be an F. And I'm just kind of using a grading system because we're used to that because we all went to school. Now, can you buy a stock at the F region and it still goes up? You could. Statistical probability, if you did that trade hundreds of times, not probably high probability trades. Okay. So on a more of a majority basis, the investor's saying, look, most of the setups are probably going to be in that A to B range. Let's actually go back and take a quick peek at this. And we're just going to go back to that chart we were looking at right there. Now I'm going to right click on the chart. And once I right click on that chart, right click, okay, buy custom with OCO bracket. Now I'm just going to, if you don't mind, I'm just going to do with stop. Okay. Now when I do right click on the chart, buy custom, and it gives us, do you want to do it with a bracket, target, and a stop? Do you want to just get in and set a stop, etc.? We're going to use that buy custom with stop. There it is. Green means we're buying. Red means we're selling. Now, what I'm going to do is I'm going to really use this area of support, 125.61. Now, let's use our little sheet of paper here. What's the current price? 131.60. Okay. What's the support level? Well, that support level is right around 125.40 or so. Okay. Well, where do you see the stop is? Well, I mean, if we did stop, we're just taking the support, okay, less 2%. Support less 2%. I just do it. I just want to clarify that so you can follow along. The dollar risk, okay, from there to the stop. And I wrote that down, okay? $8.71. Now, $8.71 is not the same thing on all stocks. If you said I lost $8.71 on a $50 stock, that's a lot. If you said I lost $8.71 on a $1,000 stock, that's not a lot. So what we try to do is put that in a percentage amount. Percentage, 6.62%. Okay? It's not, we've talked about that before. And I'm not gonna talk about the ATR, but if you like to kind of look at the ATR and gauge stops, there you go. So that stop, we're gonna type in 122.89. Okay, 122.89. Now, remember how the stops work. If these shares are purchased and that stock goes to 122.89 or lower, it could fill at a lower price. That is not guaranteed to sell at that price. It's a trigger to sell. Okay, so the con, we don't know where it's going to fill at. Okay, the gap's down, it can fill at a lot lower price than what we thought. That is the risk of stock investing. That's a risk of not buying a put versus setting a stop. It's what it is, okay? Now, some people like to kind of maybe look at different ways to manage risk. This is a way to try to de-risk, if you will. It's not perfect, okay? Confirm and send, and there it is. Now, the comment was, Anthony says, what section of the Thinkorswim are you on? Good question. So we are on the charts tab, okay? These are some of the charts that we like to use. Now, Anthony, I don't think we've met before. My name is James. Anthony, nice to meet you. The biggest actually thing is we meet on a weekly basis, and let's kind of just speak to this just real quick. And so the first thing is when we, let's go here. So first thing is when you take a look at this, if you go to this page really being, so on YouTube, you're now going to see that this is going to take us to the page on YouTube. Our channel is called Trader Talk Schwab Coaching Webcast. Okay. Now, here you're going to see that our previous classes are going to be posted here. If you said, well, every one of our classes are really going to also have a playlist. The playlist for this class, okay, is right there. And if you said, well, when you say other classes, what do you mean by that? Well, this is a calendar of different classes that we actually teach. So first off, this last link that I just sent out to you, you're going to see that if I go down to, let's say, June 11th, this is a weekly class. And there it is with right there, Trade the Trend. And you're going to see that next class coming up, let's say short options. So you might say, Anthony, I've never seen these charts before. These are the charts we use in every class that I teach. Now this chart, if you say, can I actually kind of pinpoint different coaches that I like? Yeah, sure. You said James Boyd, what do I teach? If you click on James Boyd, it's going to pull up everything I teach. Okay. If I went back to, let's say, skill set, I'm in intermediate level. There it is. And it's going to comb out or different products. Okay. Make sure you're using that calendar. Okay. So we are on the charts tab. Yes. The biggest actually thing is we are on the custom chart. So Anthony might say, I don't have these charts. Well, I want you to have them, Anthony. Accept them from the bottom of my heart. I want you to have those charts, and we think they're helpful. Okay. All right. Now, let's actually go back to this just real quick. Yeah. So let me just see. So let me just do this one more time. The question was asked about sharing these charts. Let me just do that real quick. I'm going to go just here, share that grid, and I'll put it right back in the chat. Now remember, if you're watching this on recording, I'm going to put it in the description. Okay, there it is. Now, let's also go back to a couple other stocks that might be getting a little bit of a push here. Okay, now a couple stocks. I want to kind of fast fire through a couple stocks that are getting a little bit of a push is LRCX. Notice on LRCX, you're going to notice kind of that little green dot right there. We call that a bounce setup. The acronym we really use is close above the high of the low day. Okay. Some of these semi stocks, some of them are a little stronger than others. Stock like AMAT, same thing. Green dot on the chart. Now, the reason why we made the green dot is because people would say, well, I see a bounce, but what constitutes a bounce? Okay. And so that green dot is really taking the definition we look at that I made. Okay. My definition is slightly different based on back testing, but that way we can see what we call bounces. Okay. AMAT also getting a bounce. Now, one of the stocks we're also going to kind of keep an eye on is Marvell. I just want to flag that. We don't see a bounce on that. The key word is yet, but we're going to keep an eye on that. Also, what I want to kind of do is I want to go to Intel for just a second, and I want to kind of use this as our trading example, okay? Now, if you look at, let's say, Intel, what you're now going to notice is if we were to say what type of price pattern do we see on the chart, well, it's kind of like a flag, okay? Now, to see the flag, I think this next chart could also be helpful, okay? So this next chart, what I'm going to do is let's go to the forward button. And now what you're going to see is, in this case, we call these trend candlesticks, okay? The color of the candles depict what type of trend we're in at this moment in time, okay? So when we see green colored candles, that just means the price is above both moving averages. If we see the orange color candles, price fell down below, price is up near an area of resistance. Purple, price is down below the shorter term moving average. And red, price is below both moving averages. So it's the severity of the pullback. Why do I show you this? Well, when you look at these trend color candlesticks, it becomes, for some people, a lot easier to see where's the pull and where's the flag. The simple thing is, where's the pull? The pull is the green candles. Okay? Where's the flag? The non-green candles. Okay? Now, if we were to look at this, and let's just kind of draw this, if we kind of look at this and let's say right there, there's your flag. Okay, and if we were to say, where's the top of it? It's probably right there. And then where's the pull? You should see a whole chunk of just, really in this case, green candlesticks. Okay, now that's the second chart. Now what time frame is this? Well, let's go look up at the very top. Our normal time frame that we'd show on a weekly basis is a 10-20 moving average combination. Someone said, could you use the 10-20 but put the trend candles on there? That's what this chart is. So I'm just answering your question, and then I sent that link out to you. This is the last chart we put on there. Now, what I want to do is, let's imagine the investor said, you know what, James, I think, based upon how we're reading the chart, maybe the price could break up through resistance. Now, when you look at the, let's say, the moving average itself, okay, I should say the MACD has kind of shown some signs of rotation up. There, I'll just kind of count but one. Now we've actually had another kind of second wave where now the MACD is almost gone green. So there's been some signs of maybe that selling pressure it's not as bad. And for example, we might even go above what we call the zero line and maybe go green. Now, we're not saying if we put a little happy face in here, oh yeah, we're guaranteed to go up. Well, you can draw whatever you want. It doesn't mean it's going to happen. But let's say we put a big fat green candle right there, okay? And said, bang, we break resistance, MACD goes green. Wouldn't that be just nice? No, we'll have to find out. Now, let's say the investor says, look, I want to buy the shares, but I want to kind of do just something, a different strategy, just in case, okay? Give it some buffer room. Now, what I'm going to do is I'm going to go back to the trade tab for just a second. And if we look at the trade tab, and we'll send that target in, what I'm going to do is I'm going to go back to INTC. Now, what's interesting on INTC, volatile. Volatile just means price goes up and down a lot on a daily basis. In other words, what we call range on the stock. What we're going to do is we got calls on the left, which we did example of a long call on Coca-Cola. Second, we're going to come over here to the put side. Now with puts, you can buy them or sell them. Okay? Calls, you could buy them or sell them. Okay? Or try to. We're going to come over here to the put side. We know if you buy a long call, you're a bullish investor. You think the stock's going to go up. If you sell the put, okay, that's a bullish trade. Now, just like when we talk about a long call, it's a limited upside, right? The con about the short put is you collect the premium, but the premium is the most you can make. So it's more of about a probability-based trade. You're trying to get the bullish direction, yes, but you're trying to also capture time decay. And maybe if the stock went up, the volatility could go down. Now, there's a little saying that says buy low, sell high. Okay? Well, there's also sell high and buy low. Okay? The other way. Now, what we're going to do is, in this case, we're going to sell high, or what we hope to be high, and try to buy it back low and then make the difference. Also include a commission. Now, if we clicked on that 105, what are you saying? Well, we're saying, look, we're willing to buy the shares at 105. If we click on that, the 710, if we sell a contract at 105, we're saying, look, we'll buy the shares at 105 from now until expiration. But we're saying, look, I'll commit to do that, but you got to pay me some money, honey. Okay? Now, if we do that, we're going to go, let me put it down to 720, confirm send. And so now we collect a premium. 720, the premium, is the most we can make. And remember, we're obligated to buy the shares at 105 from now to expiration. Break even at expiration, 97.80. Max profit premium. The 97.80 is if the stock went all the way to zero. That's what that is showing. And how much, what's the commission per contract? 65 cents. So in our last trade example, we're going to try to get actually Intel to break and get that MACD to actually go green. Okay? Now I'm out of time here today. Yeah, Coca-Cola, Dean, yes, was a long call. Correct. Now, some of you actually noticed, I'm just seeing also in the chat, comment also from Sam, UAL up 6% as crude. There's a little surplus. Yeah, let's go back to that just real quick and close this out. Next class coming up is on short verticals. Some of you have been looking for that oil to maybe go down. I'm not going to name anyone, but some of these airlines, we talk about Love, Delta, et cetera. We'll look and kind of talk about that tomorrow morning as well. It's been a great session here as we talk about kind of some different strategies on trying to ride that short to intermediate trend. Stay tuned for our next webcast coming up on short verticals. And don't forget to subscribe. It is free. Okay? Nice round number of 0. That way you could actually be dialed in and follow along on different classes in your time schedule and also see those recordings as well. Thanks so much to Scott for answering those questions in chat. And remember that with what we discussed here today, is done for example illustrative purposes only. Join us each week on this class as we talk about where those trends are and how to ride those trends in the paper money examples. Thanks so much. Take care. Bye-bye.